Good afternoon. So today we are going to briefly discuss the cash versus accrual basis of accounting, what they mean and why they're important and why they're relevant to business professionals. So I'm going to attempt to explain these concepts using a kind of a straightforward, simple example. And to do that, I'm going to need some input from you guys today in terms of what was one of your first jobs you had, a first summer job or first activity? What were some of the things you guys did?
Window washing.
Window washing.
McDonald's.
Working at McDonald's for the summer. Okay, great. So we'll use window washing. So when you're washing windows, right? You need to maybe purchase some things or make some preparations before you can wash the windows, right? So what are some of the things you have to purchase that you maybe use up while washing the windows?
Well, I remember purchasing some soap, and I remember rags for washing the windows.
Okay, so these rags kind of break down over time, and you got to replace them every once in a while. Okay, great. So we're going to say you're running a window washing business, right? And to be able to wash those windows, you need to purchase certain items, certain inventory items, and that's soap and rags, right? We're going to say that cost you $8, right? You spent $8. So we're just going to go ahead and record this in this cash column here, right? So in week one, you spent $8 on soap and rags and related supplies. And we'll also say that those supplies are going to last you about 2 weeks, right? For the sake of this example, we'll say you're going to use about half of it in the first week and half in the second week. So week one, again, you're a go-getter. You're not going to be sitting around, and you wash windows for 2 houses. You charge $5 per window washing. However, those individuals are not going to pay you until the second week, right? And so the revenue that you earn, the cash that you brought in week one, we're going to say is 0. Okay? Going to the second week, you wash 2 more houses, right? Charging $5 per house. And you also get cash inflows related to the 2 houses you washed the first week, right? So now we've washed how many houses? 4 houses at $5 per washing. So how much cash came in that second week then?
$20.
Right, $20. Okay? And then recall in week 2, you didn't need to purchase more supplies, right? So we're going to say we had expenses of $0, right? And so what we just did there is we were simply recording the cash inflows and outflows of the business and matching them to the particular weeks that they occurred, right? And so by doing that, we were actually accounting for things via the cash basis of accounting, right? And so what we can do is we can then sum these together to get our net income for the week. We can see in week 1, cash outflow of $8, and in week 2, we earned revenues of $20 under the cash basis of accounting, right? And we can see even in a simple example like this, some of the limitations of the cash basis of accounting, right? Because you know, as the person running this business, that you actually earned some income in that first week, right? You just simply didn't get the cash, right? So enter the accrual basis of accounting. The accrual basis of accounting attempts to more accurately match the revenues, or show the revenues and expenses in the period with which they occurred, independent of when the cash actually changed hands, right? And so to do the accrual basis, which we'll do with this in this example, we need to know 2 primary rules. The first one is that you show the revenue when it's earned, right? So when you've done the work, you've completed the work, you've finished washing all the windows, you show the revenue in that period. The second rule is that any expenses related to that work to generate that revenue gets matched to that period as well, right? Accountants call that the matching principle. So in week 1 and week 2, in these green columns, we did the cash basis of accounting. So now in blue, we're going to do an accrual basis of accounting, right? So in week 1, recall we washed 2 windows for 2 houses, right? $5 per house. So how much revenue should we reflect in week 1, independent of the cash?
$10.
$10, exactly. And then our expenses, while we had cash outflows of $8 that week, we only used up half of those expenses, right? So again, to match the 1/2 of those expenses to that period, how much would we reflect as expenses under an accrual basis of accounting? How much do you think?
$4.
$4, correct. Going to week 2, You also were able to wash 2 houses, right? You had cash inflows of $20. However, how much work did you actually, how much of that cash is related to work you performed within that week, right? So it would be, again, the 2 houses at $5 a house. I think you guys know what this is. $10, right? And then again, in theory, if we're looking at this at the end of week 1, you have about $4 worth of supplies left of that $8 that you purchased, and you're going to use it up in week 2, right? So we can see that your expenses in week 2 are $4. So now, netting these together, we can see we have income, net income, of $6 in week 1 and $6 in week 2 under an accrual basis of accounting, right? Now, business professionals, investors, financial analysts are interested in the accrual basis of accounting, and it's a requirement under U.S. generally accepted accounting principles because of this greater accuracy in terms of in your financials, in your income statement, you get a much more accurate picture of what is really going on in the business, the profitability of the business, the productivity of the business, and the health of the business.